Yeah, let us just mute our microphones. Let us mute our microphones. If you want to say something, just make sure that you use what is a trading institution. You are all welcome. Just feel at home. So let me share my screen. So okay, I hope everyone my chat. I mean, where is this? I hope everyone can see my chat, and let no one touch the screen. Let no one draw in the screen. So the problem that I have now is that I can't view the comments. Okay, there they go. So can you guys see the chat? If you can see the chat, just respond. I just want to begin. We don't have enough time. Yes, okay, thank you for responding. So okay, let us just begin with excuse me. The point of this analysis, it is just to open your eyes, guys, on how to approach the market. So let me delete these horizontal lines. So I hope you can all see that this is a dollar yen currency pair. This is a USD Japanese yen. So what is happening currently? I have posted this just a small summary in my website. I've posted it concerning this, but it is not in detail. So we are just going to look at it. So here, what I'm doing right now, I've opened my my 3 hour. This is my highest time frame. The highest time frame that I use, it is the 3 hour time frame. So I hope you can all see that I've opened the 3 hour right there. So as I always say, that when we analyze the market, guys, we always start from the top and we go down. So it's a top down analysis. It's a top down analysis that we do. So in this hard time frame, which is my 3 hour, I am here to look at the momentum. I'm here to look at the momentum, or the side of the strength, So basically, what was happening here, we can see that the market has been going down initially. It was going down initially, forming lower lows, forming lower highs, and lower lows, meaning it was a downtrend until here, until at this point, whereby the market didn't form a lower high. It formed a new high, which is above this previous high. So this high is above this previous high. So that's where we faced the problem. But before, it was still a healthy downtrend. As I say, that a healthy downtrend, it should be lower highs and lower lows. Then we can say that, okay, the momentum is still going on the downside. So but now at this point in time, the momentum has been going down, but it has changed when the market approached this stage, because it was no longer forming lower highs and lower lows. So I hope it is making sense, guys. I just want to use the built-in drawing tool so that they cannot. So okay, so when the market approached this level here, we can see that now it didn't form a lower high. It didn't form a lower high, but the high that it formed, it was equal to this previous one. Or if we can consider this part as a high, we can say that this one, it was higher than this one, which is the previous one. Okay, let me continue with those tools. And the low here, we can see that this low is now higher than the previous low. So which means now the market is now starting to form higher highs and higher lows. It is starting to form higher highs and higher lows, meaning the momentum has changed from being a downside momentum. It has begun to be an upward momentum. But the problem is as traders, people will still look at this as a good selling opportunity. They will say, okay, I'm waiting to put my sales here, because the market, it is still going down. Looking at this movement here, few people bought the price here, few people bought it here. A lot of people, they are going to buy it when it is gone, you see. So at the moment, let me just clear all my drawings. Okay, so what I'm waiting for at the moment, or what we are waiting for as a trading community, we are waiting for a discount because we now want to buy this market. We now want to buy this market because we can see that the momentum have changed from being a downward momentum into an upward momentum. So because of the higher highs and the high lows which have been formed here on the market, so now we are waiting for a discount because we want to buy. We cannot buy when the price is up here, so let them give us a discount, then we will buy. So what we are waiting for right now, we are waiting for the price to come back a bit. Maybe we can take it from this major level here, or we can look at how the price react. So we need a discount, let the price come back here, and we wait for a transition, a small last time when we made that, before we buy, before we sell, let us see a transition, you see, where the market become into a small consolidation, or where the market just spend a lot of time in the same price, you see. Then we can take, okay, we can say that, okay, now it is the right time. So when the market bounces back, we will wait for a transition or a pattern break. So a pattern break, it is what we will figure out in the smaller time frame. Okay, yeah, I'm recording. I'm recording. I'm probably going to post this after this webinar. So then, if the market give us a discount, let us be ready, guys, to press the buy buttons. So that's all I can say for now. I cannot even go to my lower time frame because it is not close to my end. I know that I can't enter here. I will only enter if the market can give even level. It is this one, but I am scared that it can't even reach this level because it's like the buyers are more aggressive. If you can check the momentum, that big wave which is ×2 the previous one. So I am scared that the price might not retrace this deep, so it can retrace and bounces. Waiting for a retracement and a pattern break or a consolidation, then I press my buy button. So let us just check another pair. So you guys, you can what can I say, you can recommend any pair that you can check. Let me just, maybe the New Zealand dollar. Clear all drawings. Okay, there is nothing much happening here. Okay, this is quite an interesting one. Okay, let us just look deeper into this one. Let me clear everything. USD card. Okay, we are just going to go to USD card after this one. I'm just going to look USD card after this one. So okay, here we have let me do this so that we can have a bit bigger waves. Okay, so here, guys, we have this currency pair here, which is called Euro New Zealand dollar. It is Euro New Zealand dollar. So it's it seems to be an interesting pair. Okay, yeah, okay, so if we are to look closer here, okay, the first thing that we are looking for, it is the momentum that is obviously going up, meaning it is an uptrend. It is going up, it is an uptrend, and the question that we need, is it a healthy uptrend, or is it an uptrend that is raising questions? So now that's the first question that we need to have as traders. Is it a good uptrend, or an uptrend that can be questionable? As I said in the previous, let's check Nasdaq if we have time. As I've said in the previous analysis, that for higher highs and higher lows, or lower lows and lower highs. So here we can see that, okay, it is forming higher lows and higher highs, meaning it is a healthy uptrend. So if it is a healthy uptrend, we are just looking for where we can just enter the market because it is safe. There is no too much So whenever we enter, we just need a discount first. So here they gave us a discount, and the market question that I have is it okay? Is it now a good time to still press the buys here, or we should wait? Okay, so now the answer that I will give you that okay, when the market opens, should we buy this pair or should we wait again? So what I can say is that okay, you can buy this pair, but you can take down your risk. Like let's say maybe you're using 0, maybe 0.08 as your lot size. Maybe now you can take this one and use 0.04. Why? Because it is now okay, the market has moved now. So if you put a stop loss, you put a stop loss here. But if you usually used to put your stop loss maybe this far, you can continue to use the same lot size. But if it seems like this stop loss is a bit far, you can change the lot size. So you can press the buy when the market opens at this level. You put your stop loss here. Probably your target can be above. It can be 1:1, or it can be 1:2, because the market seems to be moving in an uptrend. So that's what you are looking for. And as for trade management, okay, let's say you buy here when the market opens and the market start to go up, and when it reach this level, it start to consolidate. Then that's where you need to say, now let me close these small profits that I've made here. But if the market continues to go, it shoots just up, just up, just up. You just need to relax and keep on trailing your stop loss. But if the market show consolidation, it can be a sign that the market is respecting this level. So you do not have to wait for the market to come down and hit your stop loss here. You just have to cut your losses here, or the safe thing it is to zero or to put your trades into break even, whereby you will just zero your stop loss. You put your stop loss where you entered, so that when the market collapses, you don't lose anything and you do not gain anything. So it is the safe thing. So I hope it's clear for this pair. Let me just check the USD card and you go to Nasdaq. Where is this? USD card. Okay. Clear my drawings. Okay, there's someone who asked, like, he just said 4, so I don't know why are you just asking, because it's not a clear question. Stefan. Okay, so let us look at this pair, guys. USD card. I hope my network is not affected. Okay, let us check USD card. Okay, USD card, the strength is just side. The strength is on the buyer's side. Okay, which is obviously an uptrend, even your grandmother can see it. So okay, now the question is, we can see that now we have received a discount. The question is, when are we supposed to buy, or is it really a good time to buy? So okay, now what I can say is that okay, here it is an uptrend, but it is no longer a healthy uptrend, because this move here, it was not above this one. So already the sellers, they are now coming in heavy. Why? Because if you can see here, the market pushed and it retraced like just 10%, and it pushed up, it retraced like just 30%, and it pushed up and it retraced like 95% or close to 100% here, because this retracement is almost the same as the impulsive. So it retraced that level, and after it retraced that 98%, it pushed, and when it pushed up, it didn't push up more than 100%, but it pushed up less than before. Meaning, if we are to see at the sellers, they keep on increasing in strength, and the buyers, they keep on decreasing. In strength. So here, the buyers didn't took the price above the previous level, so they failed to break their previous record, and it bounced here. Meaning we can expect a movement which is going on the downside anytime. We can expect a downside collapse anytime, because of what was happening here. The buyers have been coming stronger, but they've been getting weaker and weaker. and the sellers, they've been coming strong and they become more stronger, you see. So that's why I'm saying it is questionable at this moment. So okay, let me just check if the price is on. The reason I'm going to a higher time frame now, guys, I just want to confirm if is it on a significant level or what. Let me just check the 4 hour. Not that I use this high time frame. Okay, it is not in an important level. It is just the first time approaching this level in a while. So yeah, but what I can say is that, okay, as for me, I cannot buy this pair. What I can do is that, okay, I can wait for the price to continue go down and come back up. When it come back up, when I see a reversal candle like this, or when I see a reversal pattern, I will then sell. So now let our eyes focus on the down move until the market shows signs of a bullish strength or buyer's momentum. So at this moment, we are waiting for a selling opportunity, although it is an uptrend. So the reason we are trading like this, it is because we do not want to be like the 95% of the traders, but we want to be like the 5% of the traders who begin the move, not people who just join on what have already begun, but let us be part of the people who begin the move. So that's why we are clearly observing what is happening directly, so that we can take because if we enter a sell here, our targets will be not even here, but way down, because we have entered at the earliest time. So when the retail traders begin to press their sells, that's when we are going to be exiting our trades. Even here, the big boys, they are now exiting, they are now closing their trades, but retail traders, they are looking forward to buy, while the other big boys are now closing their buys. So meaning the market is just going to collapse. So they will cry, why is the market going against me when I enter? The question is, did you enter early or you just participated? So let us go to Nasdaq. I hope it is making sense, guys. I hope it is making sense. Let us check this index called Nasdaq. Where is it? So I just need to search it here. Nasdaq. Is it okay? It's just showing a lot of gaps. Okay, let us check. I've not been trading for a while. I was just working on finishing my site. Okay, let us check on this. Okay, even Nasdaq, it is on an interesting. Is it the real Nasdaq, this one? Because they sometimes so I will need to check which is which, because I've not been following up. Okay, I believe it is Nasdaq without any interference. Okay, so here what I can say is that, okay, even Nasdaq is on a very, very interesting level. It is on an interesting level. We see that, okay, the sellers took the market at that level, and they've been controlling the market all the way up to now. So here the interesting part is that we are very, very close to our entry here, because we are looking forward to join these guys who began the move here, the guys who are pushing the market down. Because, okay, here they push the market down, and here they raised question in our minds, because they now failed to continue forming the lower highs and the lower lows. So meaning the buyers came in aggressively here until it reached this level here, which is a resistance level. So but however, the sellers managed to come in again and push the market all the way far than the previous low. So here the market is now coming up, meaning it is now giving us an opportunity. So if it is coming out, we are just going to wait for a good opportunity. A good opportunity, it is whereby we will just see the market maybe starting to slow down, and when it slowed down and when it started to go on the other side, then that's where we need to enter ourselves. So let us just be ready. Let our eyes be on this on this pair. Let our eyes be on this pair. So the purpose of this, it is just to help, or to raise an awareness on how we should look at the market, or just to give an eye on how we should approach the market. So, and what you need to know, guys, okay, is that I am not responsible for any losses. Even though I showed you my opinion, it is my opinion. It is not what is going to happen, but it is how I am going to approach the market. So yeah, I'm not responsible for any losses, but I'm showing you my opinion and how I am going to trade, how I'm going to approach the market. So I just want to see how much time I will left with. Okay, if you have any question, guys, do you have any question? If you have any question, you can just ask. If you do not have, it's fine, you can be silent. Question. And guys, you can just go and check my site. You can go and check my site. I've been sharing it on the groups. I've now included a volatility index course, so you can just go check it out. It is Mastering Volatility Index. It is a powerful, wonderful course. It is just 1 month course. You can just go check it out. And for forex trading, I've also have a Dominating Price Action 2.0. It is a very, very wonderful course. It's a very, very wonderful course. You can just go check it out. And I think I will have to decrease the amount there. I think I have to decrease the amount there. Do we have to consider coronavirus when analyzing the charts? Okay, me, what I can say is that when we analyze, we don't neglect fundamentals, we don't neglect news. We also look at news on which news are going to affect the market. Mostly it is just news which are linked to the market. That's why you can just go check Forex Factory or investing.com, whatever platform that provide forex linked news. You can just go check it out. But as for coronavirus, me, I really don't have a clear understanding on how I can just implement it on my trading. Maybe it can affect those guys who are really into fundamentals, but us, we are just technicians. I don't know if there's a name like that, but we just look the technical part of it, and then we take our decision, then we assist with fundamentals. So I really don't look at coronavirus at itself, but I just look at the news calendar on which news are going to affect the market at the moment. So I hope it is making sense. Interested in the volatility index? Yeah, you can just go check the course, guys. It is interesting. 1 month, and the good thing is that once you join this course, we are establishing a community. I'm establishing a community. I'm not just going to be giving signals. Like, I just want us guys to trade together. So if you take the course, you join the elite community for 1 month. If you take the forex course, you'll be part of the community for 2 months. So you'll be learning, yet you'll be earning. So I'm just establishing a community, no longer a signal group, but a community whereby we'll be having such videos, maybe daily, checking on which pairs are we going to take, and we trade them together. And I will also be dishing out information in form of mentorship and lessons, everything. So I just don't want to give signal, because I've seen that sometimes they don't help. Because if you tell someone buy this, he just press the buy button. He doesn't know why. He doesn't know what triggered you to say buy. So then he will not know. Even you will say buy, and after an hour you'll be closing your trade, but the person, he will be waiting for that trade to hit that take profit which you gave him. So it is not good for that particular person. It is not good in terms of development, in terms of learning. So I just want to change things so that they can be helpful. So even you will see all those things in the website. Just go to ptiforex.com. So I love you guys, and thank you for joining. I hope no one has questions. So Thank you for joining. I hope you are blessed. I think I can go now. I will find. Okay, the website seem not okay at the moment. I think it will open on like maybe one after a minute because I was adding some stuff. So I think I didn't publish it because I was just editing some stuff 30 minutes ago. So I think I will bring it back again. I think I will make it live again because I never wanted people to interfere as I'm adding stuff. So I had to close it for those few minutes. So after this webinar, I will activate it. Does Nasdaq and gold always respect trend line, especially on the smaller time frames? Oh, okay. In terms of respecting trend lines, it is not always that manner, but it just respect like the psychology because price action was formed from psychology. Like let's not put it like just trend lines, but let us just say psychology. So it do respect the trading psychology, the basic price action. So you can trade it with price action. Is it held to trade VIX and Forex same time? Yes, I do it, but I just don't want the sad news is that I no longer want to give signals, as I've said, maybe concerning VIX. Uh, I want just the only thing I'll be providing for volatility index it is a lesson, which is on my platform or on my website. The only cause, nothing else. I don't want to give signals. I don't want to give anything. I'll just be giving the lessons, and the lessons they come with strategies. So yeah, I hope it is making sense. I'm trading volatility index and Forex, but I just want to make Forex more on the public. I just want to dish out Forex more than charts. No, you don't analyze them as Forex pairs. That's why you have to take the calls, because I always say that volatility doesn't is not based on human psychology, but Forex is based on human psychology, because Forex there are real buyers and sellers, but in volatility there are no real buyers and real sellers, but which is highly risky. Volatility is risky. So if you do not have a good pocket, just trade Forex. If you have a small amount, just trade Forex. At least you can grow $50 in Forex healthy without any fear. But in VIX, you grow it by luck, because per trade you lose $15 in one trade, which is close to 50% of your account. So if you have a small account, just grow it with Forex, and you can just trade volatility as a secondary asset, guys, not as your primary, because Forex is more healthy than that. Ooh, but which is highly risk. How much can someone start with in VIX? Yeah, in VIX you can just fund something. It's like you can trade it maybe with your lunchbox money, something like that, just your extra money. But Forex should be the main thing. But if you have